Hello, everyone. This is Gautam Kent. I work with the Capital Partnership, which is a global investment firm focused on venture capital and technology investments. Healthcare is part of our active sort of investment strategy, wherein we've deployed and managed close to $200 million of assets across 20 global investments. And I'm today going to share with you some perspectives and principles and broader themes that we sort of follow while making healthcare investments. Uh, with the domain that we follow, or we typically call it healthcare innovations, healthcare technology, or health tech investment is another word which is used. Typically, these are also denoted as medtech investments. So I know I'll probably take you through some of the slides, and we can, I think, talk through those. First of all, let's sort of start with a top-down analysis. If you look at global healthcare sector, one needs to look at the sheer size and scale of the sector, and also the growth from a top-down analysis. At a global level, this sector has an annual sort of spending of roughly $8 trillion, which corresponds to 10% of global GDP. These figures are last couple of years. US, which is one of the most healthcare developed markets in the healthcare space, they spend roughly $4 trillion of spending on healthcare, and that contributes to roughly 18% of the GDP. And that has been growing over the last few years at a pace of roughly 9 to 10% every year. Uh, I think that sort of explains the broader size. But another important factor to look at healthcare sector is the growth element. If you look at this chart, which demonstrates how sort of economies, when they grow and develop over a period of time, how they sort of increase their spending on healthcare. And two perspectives here to show you are for USA as a market, and Europe as a market as a combined as well. Both these markets 50 years ago were spending 6 or 5% of their GDP and contributing both public and private sector costs, which has now shot up to 17 or 18% for the US, and 10% level for the European markets. So there is a clear trend as markets mature, as economies grow, they tend to become from developing to developed world. They tend to spend more, and with the global economic growth happening, we've been seeing this trend over the last many years in terms of increased growth in this sector happening. And just to share some perspective about Indian economy as well, India currently spends roughly, as per various estimates, roughly 3.5% of its GDP, which is sort of expected to grow exponentially in the coming years or coming decades, as more development happens, and India eventually becomes a developed country in times to come. Uh, that's on the scale and generally how the economies move. It is also important to note that demographic shift and the lifestyle changes which are happening are also going to have been sort of providing or aiding the growth of the industry. For example, if you look at again data for last 20 years, the life expectancy, which used to be 66 years, has increased to 73 years now. And because of that, more people are living in, of course, because of that aging sort of population globally, more and more spending is happening on the healthcare sector. And that again, lifestyle changes also contribute. Because of the sheer size and the growth of this sector, there has been huge private investment, and especially on the VC front as well. To give you some data, there are currently 64 healthcare unicorns, which are valued at roughly more than $170 billion in aggregate. Of these 64 healthcare unicorns, roughly 45 are from the US, 8 are from China, and two unicorns are from India. The Indian unicorns are CureFit and Pristine Care. I think this largely sort of gives you a high-level picture of the global healthcare sector spending as well as the growth. Now, let's talk about one of the key features which we, as an organization, or the themes that we have sort of been following as part of our active investment strategy. It's a prevalent fact that M&A have sort of increased and become a sort of key driver for growth for across sectors, be it financial services, technology. But one of the key aspects which has happened in healthcare sector is, if you look at the top 10 strategics healthcare firms, be it say Boston Scientific, Medtronic, Merck, Edwards, Johnson and Johnson, and so the chart on the top shows combined aggregate data for these 10 companies which are driving the industry over the last 25 years. And each of these blocks that you see is a block of 5 years. So on the left-hand side of this chart that you see is their in-house R&D spend as a percentage of revenue, which say in the year 96, 2000 used to be 9% on an average. That has currently sort of increased and stagnated over the last 15 years to 12%. So there is a jump of 32% at a high level in terms of in-house R&D spend as a percentage of revenue. Whereas if you look at the same companies on and compare that data to their M&A spend, which has happened. So this again, the 5 blocks of 5 years, last 25 years. In the year 1996, 2000, if the M&A spend was 5%, that has currently shot up to 13%. So there is a jump, significant jump, which has happened. More and more dollars or capital is being committed to M&A versus in-house R&D. In fact, this is the aggregate or average data. There are certain companies, like in specific case for Medtronic, which has cut down on its in-house R&D budget by 30%, despite the business growing so well and the company doing so well in last 25 years. They've cut down on their R&D spend by 30%. And of course, at the same time, they have increased their M&A budgets and M&A allocation. The same data is also corroborated by the fact, if you look at 20 years ago, the M&A volume or M&A transaction which used to happen in global healthcare space, they have shot up by roughly 10 times in the last 20 years. And when the key sort of finding of, or the conclusion from this analysis is that innovation in healthcare is increasingly being driven more by M&A, external M&A, rather than in-house R&D efforts for large strategic. There is a growing realization with strategics that acquiring a new product is a faster and more certain way to grow than focusing on traditional R&D. And typically small innovators act as product pipelines for these large tech, medtech companies. Why it is important to keep this theme as part of our investment strategy? We believe when we execute our investments within the healthcare space, we are looking at these companies acquiring our businesses few years down the line, and we evaluate our companies, or filter those companies, or screen those companies basis this criteria, whether there will be an attractive sort of M&A opportunity. We typically, we do not want to be investing for IPOs in typical scenarios. That's not the exit path for us. And because of this larger, broader theme, we back companies which are ideal candidates for mergers and acquisitions by these large strategic companies. This, I think, is the trend which has been observed over the last many years. If one has to look forward for next and take a view of M&A in the healthcare space over the next 5 to 10 years, there will be a significant jump in interest and acquisition. More acquisition will happen from big tech companies like Google, Apple, Amazon. All of them have now sort of expressed interest in expanding into healthcare as a domain. And we will see more and more sort of acquisition being driven by big tech companies as well. So there will be activity, and because of this broader theme, we, as part of our active strategy, as I mentioned, we focus a lot on filtering and looking at those companies which could be ideal M&A candidates. And that's part of our active exit strategy. Let's, I think, move on and talk about a general trend which is sort of observed across industries. Again, healthcare sector, like many other sectors, financial services, manufacturing, or many other sectors, is actually undergoing unprecedented disruption driven by technology. Technology is having an impact on all components of healthcare sector, be it for professionals, doctors and physicians, be it for hospitals and clinics, be it pharmaceutical or biotech, or even for payers, regulators, or and employers. We are seeing the trends and shifts happening every 5 years, and these are some of the trends which are anticipated to occur in the coming decade. Because of the disruption which has been caused by healthcare as a sector, due to technology sort of driving the disruption. These, so far, what we've spoken about are actually broader themes. Let's sort of now talk about the current state of healthcare sector, especially in the wake of COVID-19 pandemic that all of us have been facing in the last 2 years. What COVID has actually done, it's sort of acted as a blessing for healthcare sector. It has triggered 10 years of market evolution in just 10 weeks. And why we say that. If you look at on the left-hand side chart, some of the digital tech themes have actually gained a lot of prominence in the last 2 years, which effectively probably they may have taken 5 years to develop, but they sort of got and there was user acceptance which happened because of COVID, as well as regulators have also sort of become more accepting to technological changes which are happening in the healthcare space. So if one looks at prior to 2020, payers were more, or regulators were more sort of fussy on controlling regulations. During COVID, many of regulators globally have been pushing for virtual care. They've been pushing for remote patient monitoring with loosened regulations. And at the same time, there has been sort of, because of increased adoption, trust in virtual care has increased exponentially, and there has been that user acceptance. As we pass through this phase of pandemic, we believe that many of these changes are going to become permanent, and primarily from the regulators' perspective, as well as from the user acceptance perspective, and these will sort of continue and become more permanent in the coming years. Now, I would say let's talk about some of the current themes which are popular in the global healthcare innovation space. These are broadly 8 themes that we as an organization follow and focus upon. Starting with direct to consumer, it has become quite popular as a category. You've seen companies like Peloton, Ginger, Headspace, CureFit is another example, which has gained prominence in the last few years. Another category is mental health. Because of increased awareness and reduced stigma surrounding mental health and its treatment pathways, mental health, especially in the last couple of years, has gained prominence. The digital startups have raised $5 billion in 2021 alone in the mental health space, and which used to be like maybe $500 million 3 years or 4 years ago. So it was a jump of 10 times in terms of total capital raised by mental health focused digital startups in the year 2021. We at the Capital Partnership, we invested into a company called LME last year, which became a unicorn within 15 months of its launch. This was a company which was launched in 2020 during a pandemic, at the first phase of COVID, and it sort of became a unicorn, as I mentioned last year. Companies growing solidly, and they focus more on autistic care or using technology to provide autism care for children. So that's mental health. Remote patient monitoring is another sort of theme which has gained prominence. Virtual visits have increased closer to 40 times than their pre-pandemic levels, and there has been push from governments or payers for products with remote patient monitoring. We've also invested into a company called CloudCat, which is a California-based remote patient monitoring device focused on dialysis patient. And the US government has been promoting more and more of, as part of their policy changes, which are happening in the last couple of years on remote patient monitoring. So that's another theme that we have seen growing prominently in the current times. Another interesting area is digital health infrastructure, which covers various sort of aspects of health infrastructure. Pristine Care is another example from an Indian perspective. This company it became a unicorn recently and has been doing really well. Digital therapeutics, again, a very popular theme. Livongo is one of the very successful companies in this space, and which got acquired for $18 billion by Teladoc some 18 months ago. So this theme is, of course, definitely gaining a lot of prominence. Then there are companies in chronic condition management, companies which focus on healthcare aspect of, or rather the fintech aspect of healthcare. As Collective Health is part of our portfolio, which we've backed this company for the last 5 years. It's changing the way health insurance is undertaken in the US, and with the growing sort of integration, growing changes which are happening between fintech and healthcare space, this sector is also sort of, or a theme is attracting a lot of prominence. And last but not least, femtech, or sort of women's health needs, are gaining a lot of prominence currently. I will move on now and talk more about some of the principles that we typically follow. So we've now sort of spoken about at a macro level some of the trends, and now let's talk about what are some of the approaches or principles that at the Capital Partnership we follow while making our investments in the health tech or medtech space. There is no hard and fast rule about it, but these are some of the principles that have really worked for us, and we follow as our guidelines. We believe that it is better to be a fast follower or a second market disruptor within the health tech space rather than launching a novel product that may have limited market acceptance. One of the key features of healthcare sectors versus say many other sectors, especially like technology sector, where you have technology sector companies are typically monopolies. You only have one Google, you only have one Netflix or one Uber. But in healthcare or medtech space, typically these are oligopolies. The sector is always served or covered by 3 to 5 companies. So we, as part of our strategy, we don't want to be sort of causing the first level of disruption as we make investments. We want to look at the markets which are where there is already some user acceptance, and effectively we want to sort of come up with a better product by being a fast follower than currently available in the market, and become sort of capture the market share in that sense. That is typically the approach which we look at. We cannot truly forecast what trends are going to change or what will be market acceptance in 5 years or 10 years down the line. So we want to look at next few years, probably next 3 to 5 years, and then take a call on that basis this fast follower approach. So the key in many of these businesses is actually in fast execution of the concept. Idea is important, but execution of the idea is super important. We also generally prefer businesses with both hardware and software components, and why we say that is as companies capture software or the customer data, it becomes a very valuable sort of a tool over a period of time. We've all seen examples of SaaS businesses doing greatly in the technology space. While looking at companies, we look at whether there could be a SaaS angle to many of the products or businesses that we back. So which will definitely be value accretive as more and more customer data is collected. As we've spoken, I think the third point about M&A, we've already spoken about this. That's an active part of our business strategy, which we follow. When we join the board of the portfolio companies typically that we work with, we want them to be staying up with the pace of innovation, look at basically what all is happening around in the circle, and basically try to match with the pace of innovation. Another important point to note is response time. Responses, how they are taken during those transition points, are very critical. We've seen so many companies sort of change their business models during COVID-19, and because of that is another sort of critical factor to look at. What are the responses during transition points? An organization may have a business plan for next 5 years, but if they are hit in the second or a third year by a COVID-like of a situation, they are at that point of time, the response from the management team is very important, and that is why it is sort of very important to be backing companies where management teams are flexible to adapt their business plans as per the situation. Talking about sort of hedging your products, not keeping all your eggs in one basket. We generally look at companies who want to explore related domains or verticals or markets. Just to give you an example, there is a company that we have in our portfolio called CloudCat, which is in dialysis space. So their remote patient monitoring tool that they have developed focuses on dialysis as a market. But parallelly, they are also sort of looking at urinary tract infection, UTI, as a category, which the same product sort of can be deployed. From the very go or the start of the clinical trials for this company, they're also sort of actively working on and looking at as UTI as a sort of related domain. And once they get and conduct their clinical trials, and develop their product, keeping in mind the other related domains as well, the business becomes more and more sort of valuable. And that's what we generally prefer, companies which have applications in related domains or verticals and are open to capturing related markets as well. Lastly, as part of this broader theme, as we all understand, healthcare is really a complex business with some of the technologies or molecule development or things which happen. We try to invest into simple products or business plans that are easy to understand, easy to execute. We don't want to be taking call, as I said earlier, probably 5 years or 10 years down the line, what trends are going to emerge. We take sort of a medium-term call, and we track the competition, and basis that we invest into our healthcare investments. That's largely the theme. These are largely the principles that we employ while making our investments. I'm happy to take any questions. Thank you.
Yeah. Hello.
Yeah.
Gautam, do we have a few minutes? I can check with the audience.
Yeah, sure. I'm available. Yeah.
So audience, I know we are running late for the lunch, but if you have some quick questions, I think Gautam would love to have them. So please use the Ask a Question tab on your screens. Gautam, till we have the questions coming from audience, would love to hear from you in terms of, other than the healthcare part, where which are the other sectors you worked actively on?
Yeah, so I spend majority of my time over the last few years on healthcare sector. And in addition to that, I also work on technology investments that we make. So these are some of the SaaS businesses that we funded, and I spend time on those. So my primary focus areas are healthcare and technology as on the VC front.
Sure. Yeah, I can see some questions. One sec. So is your fund open to invest Indian investors? Can Indian investors invest?
Our fund is based in Cayman Islands, so it's not an AIF per Indian regulation. So if yeah, of course, it's open to global investors. So we accept all the investors in our Cayman Island fund, and that's where we invest from. So it's open, but again, we don't have an AIF vehicle registered in India.
Sure. The second question, if not for healthcare, which are the other sectors in India that would be of interest to you?
Yeah, so as an organization, we focus, I think the broader themes that we follow is our technology and healthcare. We've been looking at in the past many years transactions in India on the technology side as well, and of course we've looked at few companies on the healthcare front as well in India. So these are typically the strategies that we look at.
You know, Gautam, the question is, I mean, other than of course healthcare and tech, any
Okay.
other sector? I mean, from as someone sitting out of London and watching the Indian markets unfold, any opportunities that excite you other than healthcare and tech that you deal with on a personal level, maybe not at the company?
I think since I spend, honestly, the answer is probably no. I think given the focus that we have, that's where I spend most of my time. And but if you're talking of some of the themes, definitely fintech is a very exciting theme in India, which personally I believe has a very strong sort of again a growth outlook. So that's another sort of domain which I would say. But as I mentioned, we focus a lot on healthcare and technology as broader themes.
Okay, there's a question, slightly different question that has been asked this morning, and this coming from a wealth advisor. For wealth advisors to distribute a product like this, what is the right way to go about? So, I mean, let me reframe it. Your fund is based off Cayman Islands, and of course, anyone and everyone can invest. But is it available for wealth advisors or distributors where they can sign up with you as partners and distribute this product in India, this fund in India?
I think we need to sort of look into this into more detail, but if there is a sizable allocation which can be made, and of course there are wealth advisors globally that we work with. Northgate Capital is another sort of platform that we operate through. It's sort of we own 100% of the management company of Northgate Capital. So we at Northgate, both Northgate and as well as at the Capital Partnership, we focus and work with a lot of wealth managers globally, or sort of in that sense. And of course, if there is sort of a pool vehicle which can sort of collate capital from retail investors and is happy to invest with us, or if there is a scale, we are happy to create those structures as well for sort of for investment into our funds.
I'll take this as the last question, Gautam. The next question is saying, even after the end of COVID era, which specific part of the healthcare sector are you the most bullish on?
I think honestly, I spoke about, I think broadly the themes which we discussed, and I think one of the key sectors that we themes that we've been looking at is digital therapeutics, and there are a lot of companies which are trying to do and change with the use of technology how sort of treatment is done for patients. So that's really an exciting theme, as we spoke about that example of Livongo acquisition happening for $18 billion. There are a lot of companies which are developing and using technology and basically trying to deliver digital therapeutics to patients. So I personally believe that's an area which is of a lot of interest, and is going to see sort of huge jump in interest, as well as a jump in valuation in the coming couple of years.
Sure. One last question. Your thoughts on platforms using science-based data models to reduce time in R&D? Any thoughts on
That,
this?
yeah. So definitely this falls under digital health sort of infrastructure. We invest into companies which do clinical trials as well, which conduct animal studies, which conduct human trials, and of course we've seen a couple of companies which do and help those sort of clinical trials with the use of, say, AI or the new tech, so to say. So that's also another interesting area. It falls under the broader category of digital health infrastructure, and which again is a prominent theme.